Let me ask you about the concerns you have around your business. We've seen the numbers, and to some extent they're the backward-looking story here. What is worrying for you about the market turmoil that we've seen around coronavirus?
Not a lot, actually. We've had lots of market turmoil over the last 30 or 34 years. This is just yet another incident. We're a very long-term player. Our business is built on very long-term demographic and macro trends, and so we remain very confident about the future. People are going to have to save more for their pensions. Businesses are going to transfer their pensions to us. We're going to invest more in the economy. The economy is going to continue to grow on a go-forward basis. There's going to be lots of opportunities from decarbonisation, from climate change, for the need for more levelling up across the country. So we're very optimistic about the future.
I could be being too simple here, Nigel, but it strikes me that you have a life insurance business, right? So if this virus really starts to pick up, especially in your region, in the regions where you're active, and more people die from it, isn't that a big problem for your business?
No, not at all. We reinsure most of our life insurance. In fact, it's completely the opposite. We are more exposed to people living a lot longer than expected, as several of your listeners will know, because our pension risk transfer business is much bigger than our life insurance business. And so we would actually benefit from that, rather sadly, if that was the outcome of the virus.
OK, and it's good to hear that you're not too concerned, and to get the sort of longer-term perspective on market moves, as always, Nigel. Do you have a lack of visibility, though? I mean, interest rates, where do you expect those to go? We see the US 10-year Treasury yield below 1% for the first time in 150 years. What impact does that have on your business?
There's very little impact on our business or our profitability on a go-forward basis. I mean, what the Fed seems to be doing is saying, you know, let's not take confidence out of the economy. The US economy was doing pretty well, the UK economy pretty well too. What we have is a shortage of investment in both economies, and we need more investment to drive real wages, drive better lives for people. And there are huge investment opportunities which are not being grasped right now. And so what we need more of on a go-forward basis is more investment in both the UK and indeed the US economies. This will be a temporary blip to that, I suspect, and the Fed are responding to that potential for investment falling away.
Do you expect other help to come in the form of fiscal stimulus?
No, I think the government has that option. I mean, 20 billion in the UK is approximately 1% of GDP. The government could easily spend another 20 billion if it wanted to. Its borrowing costs are falling all of the time as old debt runs off and they take on new debt, which is much, much cheaper, and even getting cheaper still on a go-forward basis. So there's plenty of headroom, I think, for the government to take fiscal initiatives should they be required.
So the big picture around the budget, clearly, in a week or so, Nigel, will be around what they do to shore up the economy with coronavirus. But you've often talked about infrastructure projects. So what's your message to the government with regards to that budget?
No, I think it's fantastic that the new Chancellor indeed has been up to see parts of the north in recent weeks. There's huge investment opportunities in Glasgow, in Edinburgh, Newcastle, Leeds, Manchester, Birmingham, Bristol, Bath, Oxford, Cambridge, and it's fantastic that the government's actually going to put some money behind the real requirement to invest more in lots and lots of these regional cities and towns across the UK, and that'll help drive economic growth going forward. London's done an amazing job in the last 20 or 30 years. It's the best city in the world to live in. But lots of the other cities and towns in the UK are also huge investment opportunities. We've been doing it for the last 10 years, hugely successful for us as a firm. We'll continue to do it in the next 10 to 20 years, and we're really pleased that the government's coming on board.
I would invite you to come visit us here in Berlin, Nigel. It's a great city to live in as well.
It is indeed. I like Berlin too.
Let me ask about the finance side of your business. You mentioned that it's getting cheaper and cheaper to borrow. Indeed, we see the U.S. 10-year now yielding less than 97 basis points, gilts yielding less than 39 basis points. How does that affect your business at Legal & General?
Well, it doesn't affect the P&L very much of our business. It means that, you know, if required, we could borrow a lot more and invest even more in the economy driving growth. There are some balance sheet sensitivities around various interest rate movements. But again, we're a very, very long-term business based on 20, 30, 40-year trends for our business. So quarterly ups and downs of various markets or various rates don't really have a big impact on our business.
You run a large number of index strategies, Nigel. There's a lot of talk in the market around the rise of ESG and whether index strategies can respond to ESG and, you know, being more environmentally conscious in investments in the same way that maybe active funds can. Is this something that's driving your business at all?
Absolutely. We've been doing ESG. We've been doing the E, the S and the G for a very long period of time, and it's great that actually this is becoming front of mind for many, many more people. We already have a number of very successful funds which address ESG and various thematic funds that take very specific components of ESG. And so because society's trying to address more of the ESG type of issues, that's a really, really positive outcome for Legal & General.